Hey everyone, welcome back. In today's video, we're going to talk about depreciation, specifically how to use bonus depreciation and Section 179 strategically. This is one of those areas where the rules keep changing, and if you understand the options, you can really make them work for you. Before we dive in, let me start with the usual disclaimer. This video is for educational purposes only. It's not tax or legal advice. Everyone's situation is different, so you should always be talking with your own professional before you make any decisions. All right, let's talk depreciation. First, bonus depreciation. With the new tax legislation, the big beautiful bill, bonus depreciation is back up to 100%. That means if you buy qualifying assets, like equipment, you can write off the full cost right away in the year you place it in service. That's a big deal because it accelerates your tax savings. Instead of spreading deductions over several years, you get the entire benefit up front. Now here's the catch. Bonus depreciation is an all or nothing election for each class of assets. So if you buy several pieces of equipment in the same category, you either depreciate all of them using bonus or none of them. That's efficient in some cases, but it doesn't always give you flexibility. That's where Section 179 comes in. Section 179 lets you pick and choose. You can decide which assets you want to expense and which ones you want to depreciate over time. So maybe you want to fully expense one piece of equipment this year, but spread another purchase over several years. Section 179 gives you that control. And here's something a lot of people miss. Section 179 isn't just about this year's tax savings. Sometimes the smarter play is to smooth out deductions over multiple years. Why? Because if you use bonus depreciation and take it all at once, you might push your income down so low one year that you waste deductions that could have been used to offset higher tax income in future. Section 179 allows you to be more strategic, more flexible, keeping your taxable income in a lower bracket year after year instead of taking a giant deduction in one year and nothing later. Now I want to expand on that idea a bit because it's one of the ways I really like to use depreciation strategically with clients. Remember, the U.S. income tax system is graduated. The first dollars you earn are taxed at 0%, then 10%, then 12%, then it jumps to 22% and then 24% and on up from there. So one of the things I like to do with clients who are consistently profitable is to use depreciation to smooth out their income, not to eliminate it. You're going to pay a lot less in total tax, having say $100,000 of taxable income every year, than having zero income for 2 years and $300,000 the third year. That's because those lower tax brackets, the 10 and 12% ones, are your cheapest dollars. I like to tell clients to harvest the 10% and 12% brackets. If you know your business is stable and profitable long term, I generally like to use depreciation to lower your income but not bring it all the way to zero, because that's just wasting these low rate brackets. I'd rather see you land on income that's $100,000 to $125,000, enough to fully use those 10 and 12% brackets without spilling into the higher tax brackets. And one thing that comes up here, people sometimes worry that taking depreciation will make them look less profitable to banks or make it harder to get financing. That's not how it works. And when a bank looks at your financials, depreciation gets added back to your income for lending purposes. So it helps you on your taxes, but it doesn't hurt you when you're applying for loans. Let's recap. Bonus depreciation, it's simple and powerful. 100% write-off now, but it's all or nothing by asset class. Section 179 gives you flexibility to pick and choose and to spread deductions over years strategically. The smart move is to align these choices with your business cash flow, your tax bracket management, your long-term profitability, not just what looks good in the current year. That's it for today's video. In the next one, we'll talk about S corporations, the benefits, the pitfalls, and some details people often overlook. And again, if you're a client and want to look at these strategies and how they fit into your business, let's chat. If you're not yet a client, but you're running a successful business and want to explore the broader services we provide, feel free to reach out. Thanks for tuning in, and I'll see you in the next video.